Real estate investing can bring big reward and big risks. So know your risks. Welcome to the Real Estate Risk Report, the show for real-world insight on real estate investment risk. Now, here's your host, Lance Pederson.
Hello, this is Lance. Welcome to the Real Estate Risk Report. Today I have a couple guys based out of Arizona, although Sean's down in Cabo right now, but we've got Sean Parsons and Tim Scarpino. How you guys doing?
Very well. Thanks for having us, Lance.
Yeah, no, my pleasure, guys. So just a little bit of, kind of insight into these guys. So I met these guys last year. They're based down in Scottsdale, Arizona, and they run a, short-term vacation rental company called Parsons Villas. And so they operate a lot of the homes. They're owned by themselves. And it's a little different than maybe your mom and pop are renting out, a single bedroom at a time. These guys have basically built an entire hospitality business around this particular model. So it's very fascinating. So today we're going to kind of hit on sort of these, what the business model is in general, have these guys sort of, share with you how it all works. And then also just dive into, as always, sort of, the risks that kind of come along with a business model like this, and things that, oftentimes create, separation and sort of a moat that make it hard for just, any average Joe to maybe execute the strategy, at least at scale, that you run into. So, Sean, why don't you just give us a little bit of background sort of on how you stumbled into this particular business model, and I guess too, just why, maybe your own skill sets are sort of uniquely position you to execute this sort of strategy.
Stumbled into it. I've 3 generations in real estate. We always have invested in shelter. So my dad was a custom home builder. My cousin invested in 1,000 apartment units in Chicago. So I was raised by my father and my cousin, which I did acquisitions for, and the large apartment types. And then there was the real estate cycles. There was the fallout, which led us into starting over into a new market, which led us into Scottsdale. And literally went back to basics. So started flipping kind of 5-bedroom homes, higher end homes in the Scottsdale area. And as I was selling them, I would sell everything to Canadian cash buyers, which were a majority of the buyers within a 30-day time frame. And one of those Canadian cash buyers told me he was tired of paying $25,000 a month to rent these places, which completely turned my focus. And then I furnished 3 of them and found out the returns were phenomenal, and the rest is history. So then we just started scaling up from there.
Yeah. So different than sort of going, annual leases and your typical sort of, single family rental, the short-term rental business, and obviously it's been well documented with Airbnb, but maybe you can kind of speak to sort of these, the municipalities and, all of the sort of red tape that one had to work through to sort of get to where we are today. And it maybe as it pertained to you guys as you stumbled into this model, in terms of just because I believe that before to your Canadian fellow, his point, right, is that you had to rent them a month at a time and that sort of thing. So where have we came from and where are we at today in terms of that?
Well, this kind of goes hand in hand. So first portion, I'll talk about the hardest part was the financing aspect. But what Timmy will follow up with on is the municipalities and what he's done with government affairs, partnering with Barry Goldwater. But the financing was the hardest part. When there wasn't long-term leases in place, it was impossible for banks to understand it. They didn't have the underwriting guidelines for it. I had to go to community banks, and I would talk to community banks, and they're like, we just don't even know how to type it into a system. If we don't have the ability to do the data entry for all the bookings to get them in there. So it was always, the easiest answer was to say no. And that didn't matter that a lot of the money was guaranteed. During this time for the first 2 years, we had, I think, 3 cancellations, and all the money, meaning that if they canceled within 90 days, that money was ours. So it was non-refundable. So to me, it was a much more secure investment than a long-term lease, but the long-term lease was a standard to the bank underwriting. So that was my biggest hurdle, was, because everyone knows real estate is cash intensive and labor intensive, but I would go into these models and I would go in with, our personal equity, and then I would use hard money and I would try to refinance them out into long-term financing, just after the asset was stabilized, and then I could prove some of the rental formulas. But once I overcame that hurdle and found a couple local banks that were very secure with it, it made the model a lot more interesting, and a lot more feasible. But to the other portion, I'm going to let Timmy discuss on the politics side, because that's been a big animal that we're really taking charge of.
Yeah, and just kind of talking to the point of the politics, it's still a bit of, in Arizona, a bit of the Wild West. We know that some of the other cities around the country, we'll use Los Angeles, for example, that has a flat-out ban on short-term rentals, where that's not the case. I think it was 2016, Sean talked about getting the former Congressman Barry Goldwater Jr. involved, and the Goldwater Institute, along with Parsons Villas, were really, really instrumental in passing, it's called the Home Sharing Act, in 2016, State Bill 1326, that really legalized short-term rentals in Arizona. And when Arizona's Governor Doug Ducey signed that into law, essentially the State Bill 1326 says that municipalities have to treat long-term rentals the same way they treat short-term rentals. And so they cannot discriminate on how they're going to say, you can only do 30-day rentals. Obviously, HOAs will still have their restrictions, and we try to avoid HOAs at all costs. More recently, the states has come out making sure that every vacation rental is registered with this city or with the state. We have to have a transaction privilege tax. We pay our bed tax the same way hotels pay their bed tax. And at this point, we just finished an economic impact study for Arizona as a whole, and it looks like we're contributing as an industry a little over $100 million in bed tax to the Arizona travel and tourism, and we're supporting conservatively 40,000 jobs in Arizona. And the great part about Arizona is the number one GDP export is tourism, and especially as we look through the pandemic, we see a lot of guests that are staying more in the vacation rentals rather than hotels where they used to be. They feel a little more secure there. But just kind of speaking more about the politics, there's always some issues that are going to arise. We're actually proactive in it. We formed the state's first trade association dedicating to fighting for the short-term rental stakeholders. Arizona Vacation Rental Association. We have some big-time players involved with it. We've been meeting with the governor's office. We met with the state treasurer. Currently, we're meeting with all the local municipality, city council, and mayoral candidates, so we can kind of get ahead of the curve and let them know, hey, we don't need to punish the 99 to get to the 1.
And Expedia is getting behind us too. They mentioned
Expedia is behind us. Airbnb's behind us. So we got a lot of power behind us, and we have a ways to go to make that a true reckoning force, the trade association. But without a doubt, it's here to stay in Arizona. It's just such a major part of the travel and tourism industry.
Yeah, and so when you get through that sort of hurdle, and you mentioned sort of avoiding homeowners associations and things like that, anyone that can sort of stymie you, but I know that you guys, in addition to that, have some interesting ways to sort of, ensure that you endear yourselves, as the best you can to neighbors, or, how you guys look. I mean, obviously for you, that the homes that you are managing is sort of your product, and you need those to be online and available. And so what are some other ways you can sort of mitigate that risk of, angry fish shakers out in their lawn, or, phoning you and, and not to mention too, like the house parties and, all these things that can kind of get you. I know you guys have very interesting ways of sort of mitigating those sorts of things. Maybe you guys can speak to that.
Yeah, Lance, party houses are going to try, and every once in a while one will get through. We do our best to mitigate them and keep them out as much as we can. We use our in-house concierge team is a quasi screening process. So whenever our concierge team calls each guest and says, "Hey, Mr. Guest, thanks for booking with us. Do you need a private chef? Do you need dinner reservations? Do you need tea times?" They're also going to ask the purpose of the stay. And, it's a bachelor party. Well, you know what? Maybe this isn't the house for you. Mm-hmm. Or even worse, a bachelorette party. Maybe this isn't the right place for you. Let's shift you to another house that we can put you in.
Yeah.
And then, of course, whenever we take on a new property, we're going to go and meet all the neighbors, pass out our business card, let them know that we have a vested interest in being good neighbors and keeping the community quiet and nice and not really infringing on their rights. Some of the things that we'll do, Lance, we put a noise monitoring system in each home. It's called Noise Aware. Basically, it just measures the decibel levels within a home. If we violate that certain threshold, we get a notification. At that point, whoever's on duty at that time is going to pull up the cameras. We have no cameras inside. The camera facing the front door, and the camera in the back facing the swimming pool. We're going to pull up the cameras, and we're going to see, hey, it's just a few guys laying in the backyard. The music's a little too loud. Hey, guys, we better turn down the music. It's past 9 p.m.
Yeah.
Right.
Or Tanner shows up.
Yeah,
and he's a big guy.
There's 100 people walking through the front door.
Yeah.
Hey, local police department, we're kicking everybody out. We need you to help back us up.
Yeah.
And we have great relationships with all the police that help us with those things. And they act as our backup, right? So we show up, we're kicking them out, but the police are there to kind of reinforce our power there. And here's a great example. And Sean was talking about Tanner, our COO at Parsons Villas. We actually had a phone call from the police. The Paradise Valley Police called us up proactively. And they said, "Hey, listen, Tanner, we noticed it on Snapchat. Somebody rented one of your mansions and they're throwing one of these Instagram parties. So just wanted to give you the heads up before it even happens." Well, thank you, PVPD.
Yeah.
Hey, Mr. Guest, you're canceled, and we're not refunding any of your money because you're within the cancellation window.
Yeah, and this is not an ongoing thing, but it just shows how proactive we are. The house parties have they've become a lot more abundant because of the COVID. So with all the clubs and bars being shut down, everyone's trying to find alternative ways to gather. So. But no, Timmy's exactly right. It's great. We are connected and we're talking and communicating with all the police forces, the town halls, and in all the areas where our homes are. So they're calling us and we're calling them if there's any instances. So we our collaboration is great.
Yeah, no, I mean it makes a lot of sense, and that's just it, right? It's like to build a portfolio of these. It is like you said. It's like you guys you're basically. You're running a hotel that just so happens to have, the rooms spread out all across the city. But, and maybe like getting more into the business model side of it too, is that, it's gotten really competitive and maybe COVID has sort of, made some of those, that product maybe disappear off the site or, I'm not sure maybe you guys can speak to that, but in terms of the, how do you guys ensure that you fill the places up? I mean, it's like it's as competitive as sort of trying to fill seats on an airplane, and obviously the comp would be filling up hotel rooms. So maybe get into a little bit of that and kind of help us understand sort of these metrics that you guys measure, and the analytics side of it, I guess, is probably pretty interesting stuff.
Timmy.
Yeah, so like most of the hotels, we're going to have the yield management tools. Each Thursday, all the key staff members at Parsons Villas gets on a phone call, and we explore what our homes are doing as it relates to the industry, the market. We're going to see, is our pricing a little too high, a little too low? Is the market 80% booked? Well, then we better raise our rates because there's limited competition there to get that booked. Or conversely, hey, the booking's 2 weeks away. We have an opening. The market still has 20% occupancy. We notice that the guy 3 houses down is $1,000 a night for conversation. And we'll come in and say, hey, you know what? Let's just move our number to $975 a night so we can get booked. And each Thursday we jump on that call and we take a look at the market as a whole, what our homes are doing on an apples to apples basis. Our 2 to 4 bedrooms, our 4 and 5 bedrooms, we have them kind of within categories so we can more accurately compare what the market looks like. And then, of course, the key performance indicators that we look at are going to be things like the average daily rental, RevPAR. The adjusted RevPAR is really the one that we look at. And the adjusted RevPAR essentially, Lance, is if we take every day available to rent and we assign a dollar amount for how much rent we generated. So if we had the house vacant, it's a 0. If we rented it for $1,000, it's $1,000. And we basically just take that median, we create the average, and that is the adjusted RevPAR, right? It really is one of the key performance indicators that all in the hospitality industry measure, especially us.
And the reason, instead of the difference between RevPAR and adjusted is because adjusted means if there's blocks for maintenance or owner maintenance, it takes that out of effect. That's the only reason it's called adjusted. But the whole system is called yield management. So the yield management is done by a professional that we have out of Streamline, Desiree, and she's been doing it for the hospitality industry for, I think it's been 12 years, something like that. And she's phenomenal. So she has a whole team that studies that. But that's on our direct competition. To get away from the competition, we went to the 0.5% niche. So out of 9,800 units, there's probably 100 in full competition. And if you go to Paradise Valley and you go to the Scottsdale area on our size, on our renovation style, you're probably within 50 or 60 of them, of which we've got about half. So that's one way we stay away from the competition. And then due to the sheer size, we can accommodate, 3 generations of families, but due to the luxury style of it, we can accommodate doctors and key executives, people that fly on their private jets. So there's a lot of different ways that we kind of try to push and avoid away from the competition. But if you're going apples to apples, we're 20% better than the market, just because of how we do our pricing algorithms, our style, but not to mention our marketing. So we do a lot with SEO. We do a lot with branding, which is what we're really trying to build up as the Parsons Villas brand. And it's working. So word of mouth through the streets, working with business clients, having a presence at events, and then repeat guests because of what we do. So if someone's, some lady doesn't like the pot set because it's not her heavy duty pot set, we'll go run to Costco or wherever it is and we'll go get that pot set for her. Or it doesn't matter. Like no request is unreasonable. So those are some of the key aspects on how we tend to do a little bit better than the rest of the market.
Yeah. So just to translate, you're just saying that, when you're dealing with, 2, 3, 4 bedrooms, it's just red ocean down there. Like there's just, because anyone can kind of buy a house and throw it up there and you just got tons of competition, which of course drives the price down. Mm-hmm. Whereas you guys have sort of realized go upstream and then building a brand around it. So when you say the branding is sort of, hey, I trust the Parsons Villas brand. I want to stay in a Parsons Villas home because I know what to expect. Amenities are like this, the service is like that, which I suppose from just random one-off owner is all over the board. You never know what you're going to get short of outside of whatever the reviews from the past people have said. Is that sort of the strategy? Yeah,
100%. And it's consistency, like with any brand. I mean, so our products are different, so we can move around. We have people who have tried out every single one of our homes, but you're spot on. It's red ocean down to a certain level of a home size and unit size, but we've kind of ran away from the competition on that size or that side, and then after that, we're just trying to perfect the guest experience any way we can.
So do you find, is it, you mentioned sort of in that upper tier then, I mean, for many of these people, if it is like they have a second home in Phoenix or whatever, how are they generally going about? I mean, are they reaching out to people like you, or who are you competing to get that guy's business? Meaning, I mean, I'm assuming many of these people who have these homes are not in all year. Who are they engaging? Like your competition would be, what's the firm out of Portland here? Who are these other big property managers that you sort of bump into? Or
so Vacasa is not really one of our competitors.
Like Vacasa, yeah.
They're just not taking the larger luxury style. Whereas essentially three competitors out there. There's Goodnight Stay that is getting some of the business, which is my former partner Scott Graydon. He takes some of the larger homes. He just his management style is the same, where he's more of a volume guy. So he's got, 1 bedroom all the way up to the larger homes. The smaller, the 2 bedrooms and 1 bedrooms are like our guest house at our own personal residence, or, they're still unique to our style, but our main focus is the larger luxury homes. Or it's a favor for like a close friend that has another mansion, something like that. But Holiday Rental is one of our true competitors, but they don't run their homes as an investment model. So what they do is they shut down everything for 4 or 5 months out of the year, mainly during the summer, because they want to make sure that they have, the perfect tenant, and they want to make sure that the walls aren't scratched.
Yeah.
And what they're doing by doing that is their $5 million house is doing half the revenue that our $2 million house is. So if you're going to go to like a Holiday Rental as a competitor, it's some guy that just doesn't care about the true revenue. It's supplemental income for him. Whereas our approach is to really maximize the revenue. So if there's $10,000 in excessive wear and tear, but we generate another $200,000-$300,000 a year, I don't think you're going to be mad at us.
Yeah. And it's too, I think that because most of the homes that you're managing, you have the flexibility to maximize its value, is that you'll do whatever it takes to add, more bedrooms and more. I mean, is that sort of the name of the game? Is, you buy a 5-bedroom home, how can we make it a 7-bedroom home?
So it's functional style, though. We don't want to make these homes functionally obsolescent. I mean, it's sometimes it just gets ridiculous. So it's still got to have the flow and the comfort of being a true, luxury style house. But these homes are also comfortable. They're not warehouses. They're not completely modernized, but they're, it's, as I said, it's the 3 generations that can pull up in a Winnebago, but it's still, it meets the quality that a CEO would like to stay in.
Mm-hmm. So I know, like with the whole, COVID-19 thing, I suppose many would think that was just, I mean, and you obviously see it in the news with, the impact it had on Airbnb and, so I guess it's just, we're all kind of dealing with this sort of, what do you believe or what do you trust in the media these days, right? There's these narratives that are out there, but I'd suspect that most think that, the short-term vacation rental market got absolutely obliterated, and therefore this is why it might be a bad idea. So there's 2 theories, right? There's the seasonality, which would be, outside of a pandemic environment, but now with the sort of pandemic risk. I know today I filled out some questionnaire for one of our clients on like what is your pandemic business continuity plan, right? Like, it's just, I
filled out several of those for the banks, and it's hilarious.
Yeah. So maybe speak to that, like what, from your guys' perspective, what you really saw, what really happened through this pandemic, and what you're seeing now. I think that might be interesting.
Timmy, you want to go first at it?
Yeah, so I mean, obviously, the minute spring training got canceled, practically all the reservations started to try to cancel. And I think it's one of the things that are interesting to point out, that we do offer guests the chance to purchase trip protection. right? They can cancel within 2 weeks of the stay and get a full refund. And I think that's what, Sean, 10% of the total booking that they could pay for that. But we were really successful.
10% of the cancellation rates, and we were booking about 10% of the cancellation. People were getting booking or the cancellation 10% of the time. Now it's like 90% of the time they're booking the cancellation rate. So we're about to increase that charge.
So you're saying that there's a larger percentage now that are buying the trip insurance.
Oh yeah. All the time.
Yeah.
Of course.
Yeah.
Right.
Yeah.
And, like everybody, we were kind of a little bit caught flat-footed, like the airlines, like the hotels. What do we do to accommodate the guests while still being able to support our own business? And we were great. We were able to rebook the guests. Most of the cancellations, we were able to just rebook for a year out. We gave them the opportunity to book the same rate up to a year to use that credit, and most of our guests took that opportunity, which was nice that we could accommodate both without really hurting anyone too severely there.
But if you want me to, so I'll jump in. Our numbers year over year, and we can show this, and we use a system called Key Data and a number of other metrics that tie into our software system. We're 120% over after all the losses and growing. So basically our understanding, as we're talking to a lot of these guests, no one wants to stay in these community hotels anymore because they're packed on top of each other. But it also helps that we were open when the hotels weren't. But we think because of this pandemic, people want, to be secluded in their own house. So that's just going to drive us more business. Mm-hmm. So, and we're very confident on that. Because, now you're not sharing all these amenities. It's a private spot for you, but we think that is going to be a key player into not only driving our revenue, but really helping out the business. I just don't think when you get into that red ocean, so to speak, those smaller units are just competing with the hotels anyways. So they don't follow the cleanliness guidelines. They don't take care of, they don't have the type of service that we do. So, I'd rather go to a hotel and get the amenities than stay in an HOA stacked in an apartment building where it's the same problem. So our product, again, is different.
Yeah.
Yeah. And Lance, kind of to your point on that too, people ask us pretty often, well, what happens in the recession? What's going to happen during the down economy? We know those are cyclical. We know they're coming at some point, and we've always had the way of thinking that luxury still travels, and the wealthiest are still going to take vacations. And I think that we've kind of proven that through this microcosm of a down economy here, that although there was a little bit of a hiccup, we still, like Sean said, 120% year over year numbers. So we've basically proven our theory that luxury is going to continue to travel and stay in these luxury Airbnbs.
And not only have we survived, we're growing. So now we get to take advantage of everyone else that couldn't survive. So we just weeded out the competition.
Yeah, and that's kind of this sort of stuff. I remember when I met with you guys late last year, is that you felt like that was already starting to take effect anyway, right? It's just that it requires a different level of professionalism to run these things, and that's also too where you see with Vacasa and in the lower end of the market, right, is where they've just been acquiring all these mom and pop property managers. Right. And just it's through that sort of acquisition strategy. So it's already being consolidated there. And so like you said, Sean, is that ultimately the product that you have is different than that product. And therefore what it takes to run the operating business is different as well. It's this, the hotels have got hotel rooms. And I know because, having a wife and 5 children, we don't fit in hotels. Right. It doesn't work like a hotel. It just doesn't work. I mean, even the suite, it just never works. You can't do it. And to your point now is that as people, go to travel, they're much more likely to say, bring the family with them, and, they want to all be together and those sorts of things. And that's just a different product. Hotels don't offer, like to the point, Parsons Villas, a villa type product where you can kind of spread out. Not to mention, I think that's the other thing. I think you call it the money shot, and it goes to that marketing side of it too. But just the, of having the amenities and the ability to attract. I mean, obviously, there still is a lot of product out there when you're searching these, these websites like Airbnb or whatever. So maybe speak a little bit to that too. Is that how for you guys, having that design eye and that sort of vision and creativity to shape these properties makes a big difference as well. I know that you were, you had one of your properties was highlighted in the Oregonian, the top 10 places to go stay for spring training, before the pandemic. Actually, you might have 2 of them that were in the top 10. So maybe speak a little bit to that too, is that it's not just sort of, buying some property and throwing it up on a website.
Well, first, to reiterate what you're just saying about the hotels, from what I've noticed and compared to us, are great for the single traveler, the single business guy. They're perfect. But now the businesses, even like the business guys that want more space or they want more comfort, but they're traveling in teams, they want our homes. So it's harder for them when they're spread out, even a block of rooms. If you're a family and you're 3 generations and you're on different floors, it makes it a lot more complicated. So those are the guests we're trying to, that we're getting and we're growing our base from. As far as the design aspect, I don't know, Timmy, do you want to kind of give your perspective? I love following off of Timmy because he's got such a great overall perspective. I've talked about these things so many times, but it's fun hearing his point of view and bouncing off of it.
Yeah, I mean, it's all about the photos. It's all about, I think you said the money shot, and that's what it is. And we know what photos are going to look good. And that's one of the things that makes Sean so great at the acquisition process is he can go into a house within 30 seconds, tell you where we need to add the putting green, where we have to add the outdoor furniture, where does the pool table go. So whenever you open the door, that money shot is going to be through the great room, looking at the putting green with the swimming pool, all in the same shot, right? And it's about those great little, the photos and the amenities. These are all things that really help the house sell great.
But even the photos can be great, but if they don't match the experience when they get there, you're doomed.
Yeah.
So our photos will be great to attract. And it's, this is a lot of things. I love staying in some of the nicest hotels because I get ideas off them. So it's funny is that I'm a vacation rental business, but I'm always going to hotels because they have tremendous experience on design and ideas, but it's textures, colors and patterns and always trying to find the right angles. But as far as when I get into a house, the best thing that I've learned from my dad and the custom home building and past partners in the past is the layouts. I think I can turn something that's functionally obsolescent and I can really open it up, let it breathe, let it flow. So I think that's where I get tremendous value out of homes because, a lot of them have been chopped up or they're just terrible, terrible architects. I don't know who's done what with these things, but I can find the layout of the properties and then the rest are the finishes, but that's kind of collaboration. We have an architect that's right next to our office that'll get ideas from. We have a lot of designer friends, but I can get the basic eye. Instead, I can get it to drywall and then kind of put the finishing touches from there.
Right. And when we look at when we look at kind of the acquisition criteria there, even though a house may only have 4 bedrooms in it, but it's 5,000 square feet, we know that we can go in there and pretty easily add bedrooms to that footprint without doing much effort to it. So it's little things like that. And it's always hard when people ask, well, how do we pick the perfect house? And because there's not a straight quantitative analysis to it. You can't say it's this bedroom and this bathroom count and this square footage and these zip codes. There's a very real quantitative You can't have a quantitative analysis. You need that qualitative analysis to go with it there.
And you don't need a 6-car garage for a vacation rental.
Yeah.
We don't need gigantic 2-bedroom closets for a vacation rental. So those are the areas where we can find a lot of space.
Yeah, no, I mean, it makes a lot of sense. I mean, and then too, I think it's always, I think going back to this, just panning out and saying, okay, the short-term vacation rental, business model in general, we've kind of isolated the fact that there's sort of those who compete directly with hotels, those who, once again, it's sort of a different product, this villa, this, the larger homes. And once again, there's not many, comps there. I know you go to like Orlando or something, you can find, larger villas or, whatever, but they're not prevalent. And now you kind of drill in on the other risk, I think. And we hit on at the beginning in terms of the sort of regulatory, environment and the municipalities and the laws and those things. But let's talk about just, Scottsdale in particular and maybe, juxtapose against maybe one of these other, markets that someone would think, like you mentioned LA or something like that. But how important market really is when it comes to where you're executing this strategy, outside of those other things. So maybe just speak to sort of what it is that Scottsdale in particular affords you that maybe is hard to find in other markets.
Yeah. One of the things that's great about Scottsdale is it has a world renowned name associated with it. You can be in Munich, Germany, and you've heard of Scottsdale. And so there's a year-round draw of vacations here. Not only is it the great weather, but then it's the world-class events. You have the Barrett-Jackson Auto Auction. You have the Phoenix Open Golf Tournament. You have the Arabian Horse Show. You have, 22 or 20 of the Major League Baseball teams host our spring training out here in Phoenix. There's so much activities going on out here. Not to mention the great weather and the world-class golf. It's a golf mecca. Many of our guests are going to be coming out here for their golf trips as well. So one of the things we do is we partner with places like Experience Scottsdale that's going to go and market Scottsdale and market our vacation rentals all throughout the world. And so there's just one of the things that makes Scottsdale so special is the fact that it is a destination. It's a vacation destination. I think I just read that the average luxury traveler visits Scottsdale 1.8 times per year. And that allows us to kind of help capture those repeat guests. We get about half of our guests are coming direct to us, booking directly with us and not on the Airbnb and VRBO platform. Sean mentioned the SEO that we spend our money on. And I know I'm kind of getting off on a tangent off of what makes Scottsdale great, but
yeah, no.
These are all things that kind of help make Parsons Villa so special and help the guests really, really experience what Scottsdale is and what their vacation, what they dreamed their vacation would be when they looked at the house in the pictures.
Yeah, but when you think of like these more northern destinations, I guess it's just from a financial perspective of, let's just say, Jackson Hole or something like that. I mean, I don't know, you guys know better than I do, but it just seems that, the seasonality alone, can kill you. Yeah. I mean, you might be able to crush it during the winter months, but I mean, are they really able to sort of keep those places booked up, the better part of the year? I mean, I know that it gets pretty hot down in the desert there, but from what I understand from you guys is that it actually is not as much as one would think in terms of the downtime. So, like those seasonality issues and that kind of stuff too. Like, is there another market? I mean, is there really any better market in the U.S. than like a Scottsdale or those other places that you guys are maybe looking at in the U.S.?
Sean, I'll let you take that one. You want to go? So, I mean, if you're looking at like Jackson Hole, you're looking at any of the ski resorts, or you're swapping seasons, but you guys have a much shorter season. So, what's happening with Scottsdale during the summer, as I mentioned, it's kind of like Vegas in the summer, is it's attracting a lot of the young groups. So it's attracting the bachelor groups, it's the bachelorette groups. It's all the pool parties, all the DJing, all the events that make Scottsdale really fun. So That's where it's really becoming Miami of the desert. And then there's foreigners that really love the heat. It makes it a more affordable stay. But they're still coming out here. So obviously rates are reduced, but occupancies are still the same or higher. So, I mean, July, we do phenomenal. But you're looking at about a 3-month lull. Some other markets that we're looking at, as you know, as far as the management side and as Key West, and the difference with the Key West is the cost of the homes is so much greater that the return on investments are a little bit lower, but it's a year-round destination. Austin has become an incredible destination. So Texas is very favorable, but again, if you're coming to Scottsdale and if you're looking at for the risk and if you're looking at, you know, the issues on, you know, the legalization, we're the forefront of it. We are it. So you have to go through our organization that we're set up. That was Goldwater Jr., myself, and the Goldwater Institute that really pushed for getting it legalized in the first place. All the laws that are being battled and that, you know, for the funding the head lobbying organization, that's us. That's all funded by us. And, you know, there's been some battles going on and some helps with some lobbying organizations from Expedia and Airbnb independently. But that's what the Arizona Vacation Rental Association is doing, is we're uniting everyone. So everyone's getting behind us, everyone's funding us. And so we kind of control all the politics. So that is one of the reasons. So again, it's kind of like real estate. If you find a bad house, you can go force the appreciation, you can go renovate it. If we need to go step in another market that is fascinating with us, and it's not favorable towards the laws, we'll first go in to manage it. We will see if there's a way that we work it, and we will bring in the government affairs. And then if we can work our way into it and make it favorable, then we'll do that. Otherwise, we're looking for a house, you know, or a state or a market that's already favorable. Yeah. And it's a little bit more turnkey. So Scottsdale's both.
Yep.
And to the point, sorry, Lance, one more thing, just to the point of Scottsdale, I don't think it can be stated strongly enough how, relatively speaking, the luxury houses are inexpensive in Scottsdale as opposed to other parts of the country.
Yeah, I think that's a good point. To Sean's point on the ROI. Yeah, I mean, you can get a really, really, really sweet home, large, for a couple $1,000,000. Where, I mean, I know in Portland, I mean, shoot, you want to live in Portland, you know, I mean, $1 million doesn't get you far enough anymore, and that's hard to imagine, or just, you know, let alone like Seattle or the Bay Area or whatever. I mean, so with that said, I mean, it's interesting. So if you took, you know, let's just say hypothetically that you did, you know, put a renter into one of these homes, like long-term, a 1-year lease. Give us an example of sort of like NOI, you know, dollars generated from like a long-term lease compared to what you're generating NOI through, you know, by executing the vacation rental model.
So the first, I guess the funny example is we did it within McCormick Ranch, and it's a 30-day HOA. Where it's one of the homes that I sold and for $1 million, and it was turned down as doing short-term rentals, and I think we got about 3 months of doing short terms before they kind of shut us down. But on the revenue sake of it, so say it's $1 million house and it was only 4 bedrooms, it didn't really pencil out as a short-term rental, even with the 30-day HOA. So we did about $200,000 on it. But then you do all the costs on it. Say you're keeping about 40% after the management and everything else. But when the 30 days shut it down, we ended up putting a tenant in there for just under $15,000. I think it was $14,500 a month. So having it ready to go and having the furniture, we can still make it favorable as a risk adverse situation.
So it's almost like a risk mitigant. So you're just saying another way to look at it is that some of these homes, because they're furnished, your ability to even put someone in longer term, you might still generate. Yeah. So it's the turnkey, so I think where I was kind of headed with it was just to see the discrepancy between, hey, it's a vacant home, here, lease it up for, 12-month lease. They're going to pay you. I mean, what is the rental? What are you guys getting? Let's just say it's $1 a square foot per month or something. And rent, I mean, maybe it's a little bit higher than that. Like if I wanted to go down and rent a home for 12 months in Scottsdale right now, 5,000 square feet. I mean, what would I be paying? Like $7-8 a month for that?
We try to get about, I don't know, $200 to $250 a foot. But if we're doing it on a short-term basis, you're looking at $5 a foot.
So it's about double. And I think, didn't you have some other metric, Sean, where you were saying when you're looking at like the 20% rule or something, where you're trying to like generate enough, basically revenue should equal about 20% of the purchase price or the all-in capitalization or something like that in year one? Or?
Yeah. So a $2 million house should do 400,000 revenue. So
gross
you're all in a gross.
Okay.
So at 400,000, if you take it and you're taking 55% expenses, includes all our management fees, et cetera, you're always looking at around a 10K. So that's what you're looking at, or 50%. You can kind of go through there, but that's where they fluctuate on. And then it's your ability to finance. But what we're looking at is that's a standard. So our best house at $2 million, we did 560,000 gross in the first year. So that was a Valley Vista house. If I did a long-term rental on that house, maybe I get 18,000, something like that, 20,000. So, yeah.
Less than half.
Yep. And so that's what we're looking for.
In addition to the numbers being significantly better, the fact that we're in the house twice a week with short-term rentals, there's so much more attention to detail and care for the property itself. If there's any issues, we're going to find out about it right away and correct that issue with the home right away, as opposed to a long-term tenant. You don't know how they're treating your home. It may be 6 months, a year before you're in there next. And so just the care of the home is so much better in a short-term rental than in a long-term tenant.
Yeah, 100%, and that's included in all those numbers, all the preventative maintenance.
Yeah, exactly.
And another way I've always looked at it, I said February and March on a short-term rental basically is the number that you'll get on a long-term rental. So February and March will cover the whole year.
Yeah, and those are the money months. That's the spring training, and that makes sense. And then in terms of the exit strategy too, like you said, I mean, at the end of the day, putting these homes back, let's just say that, you run it 5 years or 6 years or whatever, and you put it back on the market. You more than likely, I mean, I guess it's what your ideal buyer is, probably someone who's just going to keep it as an investment anyway. I mean, at that point, once you kind of convert it, but your worst case scenario is that you just sell it back to some other person.
So some other end buyer, but then we have people that are coming in as guests that are making us unsolicited offers all the time. We get unsolicited offers on our product all the time.
Yeah.
So you have that. It can be someone that's staying in there. I want everything. I mean, you think your homes are designed like hotels. They're perfectly staged. They're not loaded with clutter and people's closets and crayon on the walls and things like that. I mean, they're model homes as they're move-in ready. So couple that with showing fantastic revenue over the years. Usually who's going to come in and pay our appreciated value is going to be someone that wants to keep it as investment, maybe even if it's part-time.
Yeah.
So it's a much better model than, trying to buy a second, third, fourth, fifth, having different homes. Investing in this and actually making a return, but being able to stay in these homes when you want to is it's a great way to look at it.
Yeah, no, it is. No, it's really fascinating. It's a fascinating model, and I love what you guys have done with it. And it's always good to kind of catch up and hear what your latest thoughts are. So I know you're down scoping out, Parsons Cabo. So that's the next frontier. So you're always on the lookout for the next
I'm always setting up another market. So.
Oh, that's great. Well, good stuff. Well, you guys take care. Tim, it's good seeing you. Sean, take care. Travel safe, and we'll be in touch.
All right. Thanks, Lance.
All right. See you guys.